Hey everyone, it's Doug at Real Simple Housing. I'm joined today with Graham Hubner from Colorado Lending Group. Super excited to have him here. I know in the past I've talked about how important it is to have an experienced agent. So today's the day, right? So I brought Graham in. We're in Boulder at his office. I'm rocking the CU swag. Go CU. So with that said, I'll turn it over to Graham, let him introduce himself, and we get started talking about all the benefits we can provide you.
Yeah, I'm Graham Hubner with Colorado Lending Group and McCall Mortgage Company, and I've been doing this for about 20 plus years, and I've known Doug a big part of that. So combined, we have a ton of experience in the industry.
50 years, guys,
Yeah.
50 years.
And we have worked a lot together on making sure that people that don't think they can get into a house, get into a house. We have a ton of programs, a ton of different possibilities depending on what your needs are and what your profile looks like.
Graham, touch on some of the down payment assistance programs. We talk often about how we can find you a home for $1,000 down, and I know you're experienced in working with those programs.
Yeah, so I mean, there's a couple of things. I think if anybody's seen any of Doug's previous videos, he has some check marks to go through. The last one that he talks about is the down payment. So it's probably the least important component of what needs to happen to get you into a home. The biggest component, I think, is your credit and your income. And so if I have boxes to check in my world, if we come right to the lending world, I like to think of it as 3 boxes. We have our income, we have our credit, and we have our assets, and the assets being the least important. So there are all these programs that'll help you with down payment. And then from there, we'll go to credit. Credit's something that we can work with. We pull credit all the time, and I notice irregularities, I notice things that could be done differently, and given the time, we can work on that if it is going to take a little time and increase a credit score and get it to a good place. If it's a need right away, we also have a way to do it rapidly. It does take a little work. We need letters and things to make it better, but credit is something we can fix.
Could you touch a little bit about, I know people oftentimes are coming to me as buyers, and they're like, do you think I qualify? A lot of times they're preconceived with the thought that, oh, I'm not strong enough yet as a buyer to be able to purchase. Can you talk about like how we try and get that process started?
Yeah, it's a really good question. I would say that probably half the people I work with are brand new to this. So when we talk about these programs, for the most part, we're talking about first-time home buyers. But the way that some define first-time home buying is not owning a home for the last 3 years. So if you haven't owned a home for the last 3 years or you've never owned a home, these programs kind of open themselves up to you. And so people don't know this, and they come to me and they think, I haven't saved enough money. You know, I've only been at my job a short period of time. Depending on the job, you could be starting in 3 weeks from now. And if it's a salary job and you haven't had a long, hiatus from employment, we're going to take that new income right away. And even if you don't start before we close that mortgage, that's okay. We'll get a pay stub afterwards. Right? So there's a lot of things people don't understand. They think they have to have this long history at the place that they work right now. They think that they haven't saved enough money. They're worried about their credit. If their credit is an 800, they think there's problems.
Right.
In our world, if your credit is over 740, it's top tier. And in most cases, as long as your credit's over 620, we can accomplish something.
So it sounds like the best way to go is don't think that you can't afford to buy a house or preconceived notions that I'm not strong enough as a person. I'm going to say reach out and contact Graham. His link is going to be in the description below. Hit that link. Get started with Graham. It may be that there's a couple quick fixes, some tweaks to your programming or to your individual process, and that you could be on that path to homeownership. Could be a month, could be, like Graham says, 6 months, 12 months. But at least we know that we can establish milestones for you that will allow you to know, okay, you check the box off, I've completed this debt service, I've paid this bill down. I increased my income. I know one thing, we've got a lot of buyers that are working 2 jobs right now. So making sure we qualify both those jobs.
That's correct.
We know, I mean, you and I have seen home prices just do these.
Yes.
Every time we think that the prices are coming down,
They don't.
especially coming out of COVID.
Yes, they
like
don't.
there's all kinds of foreclosures coming.
Yep.
It didn't happen.
Yes.
All it did was just accelerate, and then interest rates went up, and we've seen a little bit of slowdown with interest rates, but there's no question we're seeing right now there's still some great deals to be had. So basically, you're going in and you're buying a house. Day one, you're saving money.
Yeah. Day one, you're saving money. And the other thing is there's appreciation as you go too. And I mean, maybe there is, some downtrend at some point in time, but just really over time, the appreciation in real estate is something you cannot take for granted. It is the biggest way to personal wealth that is out there for everyone. And it happens while you're still earning normal money. It's happening in the background as you sit there, right? And as you take care of that place, as you improve that place. So I can't emphasize enough how much of a Kickstarter it is in everyone's lives to own a home. It is huge.
So for $1,000, you can buy your house, start saving money on rent, basically become your own landlord.
Yep.
Start accumulating wealth, right?
Yes.
You could create that, and they talk often about generational wealth. But you start early and start putting that money away into the principal reduction, into the home growth. It's all leveraged. And for $1,000, your return on investment becomes spectacular.
Yes. Huge. And not only that, a lot of people come to me and ask about, okay, well, I'm just starting this and I actually am committed to real estate and I want to try to grow, my home ownership over time of rentals, my own primary house, and maybe somebody's read a book, seen a video about it. I mean, it is real.
This video.
Yeah, it is real. And it is a path that way. So if you think about a first-time home buyer who might just be married, no kids, they buy the starter house, they don't necessarily sell that house. Now all of a sudden you're moving sideways to a different place.
So they turn it into a rental.
They're going to turn it into a rental. They're going to keep that home and think about that over time too. So let's just say it's 5 years, you move to a different home. You have a kid now, you need another bedroom. Now you keep this other home. Now you're the landlord. Now somebody else is paying your principal, interest,
be somebody else's
and
landlord.
Taxes. And that house is being paid for as you go, and you're getting the appreciation, and you're owing less money, and it's not coming out of your pocket. I mean, it is another level of that strategy that does work. It really does work. So I think what happens is, you want to find that good starter home that you're going to gain a lot of equity in, because when we see homes that are starter homes, they have the biggest gains normally. Don't you see that as well?
Absolutely.
So you get into
the biggest
that.
appreciation for sure starts at the lower end home. It has the most room to grow.
Right. And one that maybe needs some tender love and care, right? Like you're going to come in there, you're going to put wood floors in there instead of carpet. You're going to, maybe do some things, just home improvement projects, very do-it-yourself type of things, make a massive difference.
With that said, I got one other question for you that touch on, and that's debt-to-income ratio. We throw around that an acronym, DTI, debt-to-income ratio. We throw that around all the time. Like we expect everybody to know what that means. Could you just touch on what that is and inside the loans?
Yes.
Because I know buyers, and my buyers especially, they're very well educated as far as like knowing their credit, and they know how much their monthly outlay is, and they know they're watching their pennies. And
so they have a budget.
So they understand it, but maybe talk about, they're trying to understand what DTI means specific to them from a lender's perspective to their own self.
Yeah, because it's going to be very different. The way that we look at DTI is different than maybe somebody budgets their own home as far as what they have to pay every month, right? We're not going to take into account your cell phone bill, your groceries. They look at what's on your credit report and what your housing payment is going to be.
Okay.
So you have an income, and let's just use some round numbers here. You make $5,000 gross per month, and you have a mortgage payment that's $2,000, okay? And you have a total debt obligation, meaning some credit cards I pay, or a car loan, and that's another $500.
Okay.
So if you looked at $5,000 a month and we have a debt of $2,500, you're at 50% debt to income ratio, right?
There you go. Okay. Can you use $1,000 from your 401k to be able to use that as the down payment for your house?
I am so glad you asked that question, because it's the best thing since sliced bread. If somebody does have a 401k,
Yep.
and they've had it for a while, and they have $50,000 in that 401k, in general, most 401k plans will allow you to borrow your own money up to $50,000 for the purchase of a primary residence.
Wow.
And you're paying yourself back with interest, right? So you're just having a deduction every month on your paycheck to pay that loan that you borrowed from yourself over time. So it is borrowing your own money ahead of retirement. And you can't do that in other situations. You're getting penalized and taxed and the whole 9 yards. In this case, you can take 50 grand earlier, apply it towards another asset, and slowly pay that back with interest for yourself.
Wow.
You're not paying anybody else's interest. It's you. You're earning more.
So
great.
out of a 401k,
Yep.
you literally could buy a house without ever coming money out of your own pocket, if you will. It's coming out of your retirement funds.
Yes.
And then you're paying it down over time.
Correct.
So
It's
you don't
really
even
one of
have
the
to
best
take
things
one
ever.
paycheck.
Yeah.
Like literally nobody out of pocket.
Yep. And the other one that I like to say is the best loan out there is if you are a veteran and you were disabled, you have no funding fee for the VA. You can buy a house at 100%. And generally the rates on VA loans and FHA loans are about 0.5% lower than conventional rates. So the other benefit to a VA loan is 100% financing and no mortgage insurance.
Wow.
So from that standpoint, it's one of the best loans out there. If you are a vet that wasn't disabled, you're going to have a funding fee that you're going to pay the VA. That's how they keep collecting their money. The funding fees can be kind of expensive. They can be over 2%, generally not more than 3%, but it's still worth it. It's 100% loan to value. There's no mortgage insurance. It's a great program for our veterans.
Oh, that's great. Love hearing that our vets are being taken care of in that way. They've been great to our country, and it's nice to see that they're getting the benefit as they should.
Yes. Yep.
So, good. Well, with that said, Graham, thank you very much for your time.
Of course.
Love being over at your office here in Boulder at Colorado Lending Group.
My pleasure,
and,
Doug.
You know, everyone, you're fortunate to be able to get some wisdom here from Graham. He's got so many years of experience to be able to share with you. I love the ideas that came out and how people can become homeowners. Mm-hmm. In the description below is a link to Graham and his contact page so you can share your information to get started. Let's get you on a path to home ownership so you can purchase a home. Let's start you with that saving money, building wealth, creating generational wealth. I mean, it's just spectacular. And then as always, Doug with Real Simple Housing, contact information, if you want to reach out to us, is below. Hit that in the description. We'll get you started. Either Graham or myself will get you on that path to home ownership. We look forward to connecting you with all the programs that are out there. Don't be overwhelmed. This is a process. We will walk with you lockstep to make sure that you get into the home that you expect, and we look forward to doing it.
Yep, look forward to it. Thanks for having me, Doug.
Yeah, thanks a lot, Graham.
Yep.